Stay informed on earnings trends and analysis in Zacks Earnings Outlook.
We're going to get a preview now of the second quarter earnings reporting season with our research director, Shiraz Mian. He's going to clue us in on what he expects to see in the next month or so as these companies report. So let's start off with some of the key metrics. What are some of the key metrics going to be that we should pay attention to?
You know, the traditional metrics we'll all be paying attention to. The growth rates being a challenge lately, top line growth, the level of surprises, particularly for revenues. But more than all of these would be company guidance. And there's just way too much uncertainty globally and domestically, but primarily beyond the U.S. borders, that it'll be very interesting to see how management teams see the outlook for their businesses in Q3 and beyond. And we did see some tentative positives on that front in the previous season. Not a lot of positives, but since we are so used to negatives, they were just relatively less negative. So guidance, which will be driving trends and estimate revisions for Q3 and beyond, will be the most important metric I'll be watching.
All right, so what about the scorecard now? What are you looking for overall?
Okay, so I have this busy looking summary table for folks. And as you could see, total earnings for the S&P 500 are expected to be down 6.2% on 0.7% lower revenues. This will be the consecutive fifth quarter in a row of negative earnings growth for the index. Oil has always been and still remains a big drag, but even on an ex-oil or ex-energy basis, growth for the index would still be in the negative. So another quarter of earnings declines for the S&P 500. That's the big picture summary.
So that is going to be the fifth consecutive quarter of year-over-year earnings declines?
That's correct.
Since 2008 for the index, right?
That's right. Yeah, the last time we had this back-to-back was during the great financial crisis, so yes.
So what do you think that says, if anything, about the prospects of a better second half that you and I had talked about a long time ago?
You know, it's always sunnier and greener beyond 6 to 9 months for Wall Street, and we see that we have been seeing that consistently for the last many years, and we still see that in current consensus expectations for the second half and beyond. I have this the summary chart which shows what is expected for the June quarter of 16, what we saw in the preceding ones, and what is expected for the coming ones. So what we see now is that Q3 is essentially flat.
Okay.
It's just a tad bit in the negative, 0.1% decline. And it goes back to your initial question where you say what we will be looking for. If the guidance will determine what happens to earnings growth expectations for Q3. Right now it's about flat. If we go by history or the last 6 to 8 quarters, I would expect this to go down to about 3.5%, 4% decline. But you would see that the last quarter of 2016 is showing positive growth, and then the first quarter of 2017 is in double digits. So not a lot of optimism about the back half, but certainly an improvement over what we have been seeing in recent quarters.
I think the chart that you flipped by before this one had to do with revisions. Let's talk about estimate revisions.
That's right.
So as far as I can tell, analysts so far seem to have made smaller cuts than average, right?
That's right. Yeah, and that's exactly what I was referring to when I said we saw some telltale signs of positivity the last earning reporting cycle during the Q1 earnings season. And typically what happens is that when companies are reporting results for the previous quarter, in this case they'll be reporting for the June quarter, they give us guidance for the current period, meaning they'll be giving us guidance for the September quarter. So as they report results, we see this downtrend in estimates for the current quarter. So it's flat for the September quarter now, earnings growth. I expect it to go down. The last time we were in an earnings cycle, which was in the March quarter, at that time estimates came down for the June quarter, but they did not come down as much. And there were a number of reasons for that. Oil had made an upturn by then. The U.S. dollar, the big drag from that had started fading to some extent. But beyond these two, there was some positivity, some optimism about the domestic economic outlook too. So all of that resulted in fewer negative revisions, both in the pace and magnitude. So yes, the 6.2% is a decline from barely positive at the beginning of the year, but this isn't as bad as we had been seeing in other recent periods, yes.
All right, so another quarter overall of earnings declines is what we have to look forward to. Declines across all sectors?
Pretty much. I mean, you could say that. I'll refer back to the that summary table I shared with folks earlier, and you could see 9 of the 16 ZACS sectors will have earnings declines year over year, which includes all the major ones. We talked about energy already, but you take finance, you take technology, the two big pieces in the index, both in the negative. Technology on the whole is not really that bad. The big negative we see, 6.4% earnings decline for the sector, is primarily because of Apple. Apple carries a lot of weight, both in the index as a whole and then particularly in the technology sector. They'll have 20-25% earnings decline based on current estimates. If you take Apple out of technology, not much is left if you take them out. But if you take them out, then they are barely, essentially flat from the year earlier level. And you have strong growth in the newer, more kind of glamorous names, the Facebooks and the Googles of the world. And then you have weakness in the legacy tech players, the Microsofts, the Intels, the Oracles, and also in the Apple. Finance, it was a tough period across the board. All the major banks have tough comparisons. So not really much on the positive side. The major sectors are all in the negative. On the positive side, among some of the smaller ones, as you could see, the autos should do better, construction should do better, utilities, surprise, surprise, have better earnings growth, and medical is in positive as well.
What about the dollar as far as a headwind for the multinationals? Is that going to play out that way again?
It will be, but not to the same extent as it was in Q1 16 and Q4 15. So it's still a tough comparison for most of these guys, particularly the folks who have a big chunk of their revenues coming from abroad. But its impact had been fading prior to the last few days when the dollar started gaining ground again. So it'll be interesting to see how managements put the dollar story as they discuss the outlook, because dollar had weakened and it has started strengthening again in recent days.
If not the dollar, then maybe Brexit. Is that going to be a headwind? Color that picture of the second half that you talked about?
Yeah, so Britain by itself is not a big deal, but it affects a whole bunch of other things. So the dollar thing we were referring to and the recent upturn in the value of dollar relative to euro and other currencies is a direct outcome of Brexit. So to the extent that this upturn is sustained and we see continued strength in dollar, there'll be a net negative and there'll be a direct result of Brexit. And then there are these questions about a recession in the UK is, even though small, but it's still a negative. We sell stuff over there. A lot of our companies have operations there.
Yep.
It's a major part of Europe, so Europeans cannot sell that much stuff to Great Britain, and that's a negative for us. So net, it's a negative, not a huge one, but still a negative.
Again, mostly for the multinational corporations.
Mostly for the multinationals, that's right.
All right. Well, you're going to keep tabs on what happens. All kicks off on July the 11th, right?
Well, it has kicked off already.
Right.
From our reckoning. There's 20 S&P 500 companies with quarters ending in May have reported results already, but on 11th, Alcoa will report results,
Right.
so everybody then starts paying attention to it.
Okay.
Yeah.
And you can keep tabs, as Shiraz will, on his earnings preview commentaries and his earnings outlook commentaries on Zacks.com. There is where he will let you know about all of the changes and the trends as the second quarter earnings season progresses. And we'll be doing these video updates periodically through the season as well. With Shiraz, I'm Terry Ruffalo.